Yep, there we go. Up 37 cents to $37. Looks like we got a little bit over that hour ago. And Jim, I'm gonna pull this chart back. You can see here we were back in January of last year at $22, up to $37. Obviously, we've had gold rallying. I would suggest that it's perhaps not the most cuddly stable time in the world of government and geopolitics, but anything, especially from your perspective on the mining side and thoughts or observations on a stunning rally that's brought us. This is only the third time we've been in this territory, so love to know what you've been seeing and thinking about. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited because after spending the last 2 days at the Rick Rule Symposium, get to dig into some of the things that I was seeing there with my friend Jim McDonald, who is running Kootenay Silver, and company I've been familiar with for a while, and fortunately, in the past couple months, they've had quite a bit of progress, which we will dig into. And Jim is also down there active in Mexico, where we've had a lot of news come out lately, a lot of confusion among different things. And also, Jim, will be great to get your perspective on some of the conditions in the junior side of the market, which is something I got to hear quite a bit about the past few days. And on top of all of that, well, we dipped 2/100ths of a penny, but as we're recording here on a Thursday morning, we have a almost $37 silver price. We'll see if that changes. So, with all that said, Jim, it's a pleasure to have you on in here. I certainly have a great appreciation the couple of years that I've been doing this of what goes into. It's nice when we have the silver in our hand, although not the easiest business to navigate. So it's a pleasure to have you here. And before we dig in, how are you today, my friend?
Great, Chris.
Well, perhaps to start, if you have any thoughts on what we've seen this last year and a
There's your,
half.
there's your 37.
Yep, there we go. Up 37 cents to $37. Looks like we got a little bit over that hour ago. And Jim, I'm gonna pull this chart back. You can see here we were back in January of last year at $22, up to $37. Obviously, we've had gold rallying. I would suggest that it's perhaps not the most cuddly stable time in the world of government and geopolitics, but anything, especially from your perspective on the mining side and thoughts or observations on a stunning rally that's brought us. This is only the third time we've been in this territory, so love to know what you've been seeing and thinking about.
Well, we've been calling for this price action in silver ourselves, believing this was going to happen for quite some time. We've been, as you're showing here, I don't see how far back that chart goes exactly, but we were in a long channel between, let's say, about $18 and $22 silver for a number of years, in fact. And building a great bottom. And gold did the same thing, but it busted out decisively uh, well ahead of silver, which is very typical of what we see in precious metal cycles. And often happens. Silver, then the famous gold to silver ratio has been at near historic highs for some months now. And that'll pull back to a median that's more down in that 60 ratio range as opposed to around 100 where it is close to today. And then it'll generally, well, not generally, it always shoots down the other side. So when the last time silver peaked, hit its high, its historic high of over $50, it was down around, the ratio was down around 30 something. So, big swings there in the silver market. And there's a lot of leverage to silver price when you get into these precious metal cycles. There's a lot of reasons for this happening. And, the primary driver here are the sort of the fiscal policies around the world and the monetary policies that we're seeing, all the money that's continually being created and pushed into the economy, devaluating the paper dollar, consistently over the last 30 years, at least. Well, longer. Actually, we
Let's
went
give
off.
them full credit, Jim. Come on, they have a good track record here.
Yeah, we went off the gold, any former gold standard over 50 years ago. So, but yeah, but so the point being, the macro is very strong for the precious metals, and now we're finally seeing that silver break out, and it hitting 37s, 37 and change, breaking through that. It's gonna, we believe, run to through 40. When that happens, it could be pretty fast to challenge the old highs of 50 after that. And so it's following gold. It always follows gold. You've got the interesting dynamic that creates this inelasticity and slingshot like effect on silver because you have this huge industrial demand that consumes the silver. And when you stack on top of that an increasing appetite for monetary demand, as call it poor man's gold, then you have this real slingshot effect because the two consumption points, the industrial and monetary demand, are competing with each other suddenly. And we've seen that in the past. That's what we expect to happen now going forward. And we see this breakout here, which happened over a year ago. As you pointed out, we were down to $22 silver not that long ago. And then we had a decisive breakout last year where it broke through 30, challenged 37, then pulled back under 30. And now it's making its next charge above 37. I guess last October it was breaking 35. And so that chart technically is looking very strong and is breaking out. And we think we're not that far off anymore from it challenging that old high. And then once it goes through that, I think it becomes anyone's bet to how far it actually goes. But because of the macro side, this is also what's happening is you got a continually increasing base on the silver price, the rising base, which is very good for the silver mining industry, of course.
Yeah, well, a lot of great points that you mentioned in there, Jim, and especially you touched on the gold to silver ratio. And it's interesting if you look at least at the latest Silver Institute and World Gold Council, I believe the actual mining ratio, I think it was even below 7 this year. I know a year or two ago it had dipped below 8, but you wonder how that plays out. And you mentioned also the robust industrial demand, which set a new record last year. And I'm going to pull up the deficit that you also touched on because mixed in there, it seems like maybe people like you and I, and perhaps the folks watching this, wonder a bit more than maybe the average mainstream investor, where we see these deficits here. This is last 3 years. If you don't include the ETFs, if silver is being reported going into the ETFs, I think it's a good argument to be made that you would include that. So we're running these deficits here, and I guess the one of the things I'd really love to get your insight on, and something I heard a lot about over the past week, is that as people know, during those years where silver was hovering between 18 and 22, like you said, a lot of financings weren't getting done. So based on what we're seeing, we're running a deficit. We see a world liking its electronics, wanting to go green. I've seen an Oxford economics study that forecast they looked at industrial demand for silver over the next 10 years. They came back saying that they expected to grow 46%. Maybe they'll be right, maybe they'll be wrong, but at least we have one vote that that's not going to stop. So, but at the bottom of all of that, it's a situation where you think, all right, well, we want all hands on deck getting silver out of the ground to address where governments are trying to drive this world. But that's changed a little bit recently from what I've been seeing and hearing. But anything you could touch on there, especially we have a lot of folks that are mining stock investors, and I think the most often repeated question over the past year is, all right, we're seeing gold and silver move. When is money coming back to the mining stocks? And just love to get your perspective on any of that.
Well, you're seeing it come back into the precious metal sector here, certainly, and there's quite a bit of appetite on the side, particularly copper on the base metal side currently. And silver lagging gold, you're just seeing now, you're starting to see an interesting trend. You're seeing these large generalist type funds coming into these names now. And we just completed a bought deal that got upsized to over 17 million. With a green shoe, it went to 20 million. The appetite was much, much bigger than that, in fact.
Yeah.
And there's been some more advanced projects in us launch financings and some operating companies where real big funds have gone in, and the financings were oversubscribed reportedly 3, 4 times, which is incredible. And that's because of that type of money coming in. Well, that's a sign that things have shifted for sure. And that's also typical of these mining cycles. And the producers always go first. And you'll see pretty strong price movements in any of those silver or gold producing companies. Their charts look fantastic, and they're making a lot of money now. And that's always the first to move. And then the next will be the development stage, the ones that are or at sort of feasibility study stage or just before getting ready to go to production perhaps. And then after that are the resource companies like us. And then we're starting to see those companies move as well. And so we're at the resource stage moving towards economic study, and we're very focused on, we're still going into another big drill program to increase the size of our resource and then move to economic study. But at that sort of stage, those companies are now starting to get some real good interest in buying and price action. And then after that is going to be maybe companies who've got really great drill hits, no resource defined yet, and then further down the line to the more early stage exploration companies. So that's typically what you see happen in these markets. And so now we're just at sort of the beginning of this precious metal bull run, especially well on the silver side, most certainly. And we see this silver market and gold market. If you look back, looking for similarities in time, more similar to, say, 2003 or 2003 to 2005, let's say, than 2020. Because one of the things we hear is that, well, is this just another false move on silver and it's going to pull back down to the low 20s? Well, no, it doesn't look like that at all. And what we're seeing in terms of investors coming into the market, everything else, it's not like 2020, which was it was a important kind of bellwether and did mark the beginning of a pretty strong move up, especially for gold. Uh, but the price action was pretty short-lived. 2003 to 2005, you saw gold come off the bottom and silver eventually along with it. And it was basically a 10-year bull run.
Yeah, and let me pull up the chart so people can see how silver was accelerating in there. And Jim, you mentioned something interesting. I'll phrase this carefully so we don't get anyone upset today. Although I've been thinking about it, if silver did go back into the low 20s, obviously there would be a bunch of things that wouldn't be ideal about that. Although I think you could say that based on everything else we've been mentioning here, if that did happen, I mean, that would seemingly hurt the supply quite a bit. And I would think you could make the case if that happened, that would accelerate what could conceivably be a longer term target because of the supply issues that we already mentioned. So I agree. I think that's going to be hard to pull off and a bit unlikely. Although one other thing I wanted to ask you about, we've started to see some deals on the silver side. Wouldn't say it's we're not like the Bitcoin investors in 2018 yet, but is that something you're expecting more of, especially as larger mines get depleted? Do you think that we'll see a pickup, especially if the price, let's say we are above $40 by the end of the year? Is that something you would think people should be on watch for?
Continued price movement, you mean upward?
Or
Or
just that if there is, or whether the price stays here or goes a little higher, do you expect more M&A and seeing some of the larger companies now realize, hey, we need to increase our portfolio and bring some of the smaller projects in?
yeah, that's natural progression, and you'd certainly expect to see that. You're seeing with the strong silver price now, margins are really good. Some of these silver mining companies, the mid-sized guys, the big guys, of course, but are making a lot of free cash flow now.
Hmm.
And so now they have to deploy that. And they will have their own brownfields operations near their own mines. But after that, you've got to eventually replace your reserves and resources. And that's not easy to do. It takes a long time. It's hard to discover new deposits, first of all, and then it's difficult to advance them to the economic and permitting stage. There's a big timeline there, and from discovery to production, on average, it's going to be well over 10 years,
Yep.
probably 15 years or so, with some exceptions. If things are really line up, like on the Las Chispas discovery, you had already a lot of old underground development there that could be utilized and help speed things up. But that's an exception. I think that got into production in a time frame of about 4 or 5 years from discovery. So that was very rapid. But the point is when you've got it's so difficult to find new deposits and more difficult to find ones that are economic. You've got a very long timeline of replacing the
Yep.
resources that you're depleting. A very long timeline. It's hard to appreciate that. And when you get price weakness in the sector and you get a bear market in the metal price and the profit margins are being squeezed by the miners, the first thing that gets sacrificed is the exploration,
Yep.
and it gets usually cut right off if it's bad enough. And but yet that's the lifeblood of the future of, of the industry. So that further exasperates that timeline and ability to replace what you're mining. So it's a really interesting industry from that aspect, and it's so it does create this environment where you can really have a pretty severe shortage at some point if you're not careful.
I that's the same answer I sit here coming back with every day, and I guess we'll find out in a couple of years. Although I look at the numbers that we have out there, and not, I mean, the Silver Institute certainly, but a lot of other data that supports that, and certainly helpful to talk with people like you to get your opinion. Jim, I know you're active in Mexico, and one thing, obviously, we've had a lot of news coming out of the Mexican government, and be great. We were talking, you and I were talking about this before we hit record, but if you could give people an update, because obviously you have to be very clear and aware of the policies and how what is being suggested versus what is actually happening. So could you touch on that for a moment?
Yeah, so last 6 years have been fairly AMLO, he and his administration, especially him, pretty anti-mining. And when Sean Biden came in, same party, and they've got quite a strong majority in both houses there in Mexico. And they've come in with a very significant shift in the attitude towards mining. It's much more positive. She came out early after becoming president, saying that we have to realize that we need open pit mining because there's this open pit ban floated out there, and then there have been actual tangible actions like they've uh, now are allowing up to 50, I think it's 56% of a capital bill to be written off in the first year, which is very helpful when you're financing and building an operating mine. And so there's some tangible action there. They're going through this process of writing the new regulations for the new mining law. We haven't seen those yet, but it looks like what the approach is they really want to get the aspects of those regulations on the mining side correct before they move on to other issues. And right speaks, it's all in that context. They want to be writing these regulations, making sure they have very strong environmental standards, very strong social standards, and that local communities and stakeholders are benefiting from these mining operations, which they do benefit from tremendously today already. I mean, the mining companies in Mexico are already very responsible and bringing huge benefits to local communities and operating in a very environmentally responsible way. So that, practically the way they're operating already is not really going to change because they're already employing the highest standards. And so it's been a positive shift in the right direction. We hear more talk of things that are coming that are positive, and then now we're waiting for it to all be finalized and come out.
All right. Well, I appreciate that because obviously that's something on the mind of silver investors. And Jim, through all of those changes that have been going on, I commend you because here we have on June 17th, you guys have been able to navigate that and delivered your maiden resource estimate, which came back with 54 million ounces at 284 grams per ton. You have some lead and zinc in there as well. So perhaps you could give us an overview, especially for people who are new to Kootenay Silver, and anything you could share to give them an idea of what you guys have been doing.
Yeah, so this is our fourth discovery for the company. We've been in Mexico for over 20 years. We've made three other discoveries that give us this huge resource base in the ground. This is our most important discovery to date, we believe, because of two things. Because the grade we're seeing is classic high-grade vein system. The width of the veins are really excellent here. You see 5 to 6 meters on average across all the zones that make up this current resource. And also just the scale of the project we have and the size of the vein system, the depth that our deepest holes are taking it to quite a very deep depth, still mineralized, still wide open. So we see the upside potential here for a vein district that is 100 million ounces in size, or maybe even multiples of that. Project is geologically well situated because there's hardly been any erosion of the system. It's almost pristine in that it's sitting there as it was formed originally, and very, very little erosion, just enough erosion to expose the very top edge of the veins where they start to become silver productive. And at the lowest points in the project, so we sit in an old volcano, this caldera, and at the bottom of the caldera is erosion low, and we've just exposed the vein. The veins have just been exposed at that level. And you walk up the sides of the hills, up at caldera edges, you lose the vein and you lose the silver. Your structure's still there, but the silver veins are down under the ground beneath your feet. The whole thing's been preserved. So that's pretty exciting geologically because of the scale of the system and the kind of drill intercepts that we're seeing. This could be a project with multiples of 100 million ounces. It could be a very significant silver system here. Well, it is a very significant silver system, but it could be one of those that could be sort of the 300. We've got 54 million ounces on the maiden, which is an excellent start. We see very clear targets here for expanding the size of that resource because all of these zones, we haven't found the edges of any of these zones yet. So we know they're going to get bigger. And so the early drilling is going to be very straightforward and stepping out on 75, 100 meters away from what we already know is there. So very good probability holes, as we classify them, being high probability, medium, and low. And if you're scrolling through the presentation here, with this slide just shows the scale. So we're on the right-hand side. It's about a 4 kilometer by 3 kilometer vein system. Similar scale to the Panuco discovery in Mexico, that's 300 million ounces of silver equivalent. And then on the left-hand side is the Las Chispas mine that Coeur just bought. It was operating. I think the last resource that I saw there was 140 million ounces. So one of the things geologically, what is our potential? One of the first things you look at is, well, what's the size of the system?
Yeah.
And that's a good guideline first step to say, okay, well, what does it hold? After that, when you start drilling, the real proof in the pudding comes from those drill results. And we've got some zones there, particularly in the D vein, just incredible hits. There's one hole where at surface we have no silver at all in the structure. About 200 meters deeper vertically, we've got an intercept there of 98 meters of over 200 grams per ton. And then two sort of high grade intervals, or one high grade interval there that's another 11 meters of half kilo, 500 grams per ton inside it. So just an incredible intercepts. There's some really, really thick zones within some of these veins here. And in a mining scenario, when you get in those real thick zones, that's where your margins are really great. So we're a long way away from the economic state. Well, not long way actually, but we're financed now for another 50,000 meters of drilling. We've drilled 53,000 meters to date. And so now we're about to embark on that next drill program. The objective is to now grow the size of that resource, get it pushed up towards that 100 million ounce mark, which is our next objective, get it up as close as we can to that, and then beyond, hopefully, drill result dependent, and then move it at the right stage. In other words, when we start to see enough ounces being formed there, at some point we're going to say, well, now it's time for an economic assessment, preliminary economic assessment, then moving on beyond that, based if the results are positive, and so far our drill results certainly point to that direction. So next steps, a bunch more drilling, update that resource, start moving down towards a preliminary economic assessment.
Yeah, and I appreciate you touching on that, especially after a couple of days at the Rick Rules Symposium, whereas people who've heard Rick speak often are familiar that one of the things that he looks at, I think Eric Sprott talks about this a bit too, is does this have the potential to get bigger? And it seems like you have that in place, which I know is a key bucket for a lot of investors. And Jim, you touched on the drill results a bit in there, and also you mentioned that just completed you completed 200 holes and 53,000 meters, and have another 50,000 meters planned. Is correct?
Yeah, that's right. So basically double what we've done to date.
Okay.
And so and now we have the last round of drilling, we were hitting in practically every hole. Probably about 90% of our drill holes were hits. Incredible. The continuity of these veins is just really incredible, actually. And so now we're going to go back in with double the amount of drilling. Can we double the size of the resource? I don't know. We're going to find out. But we certainly have some very low hanging fruit here. None of these resource bodies is been closed off. So we're just basically going to step away from the edges of those resource bodies with drill holes and keep going until we find those limits. That's the first part of this program. Then we'll go down to the next level, which is where veins where we have some drill holes and we have some real good silver hits. Then we'll go in there and start to sort of drill in a grid-like pattern and define if we've got resource bodies there as well. And then eventually we'll get down to those veins that we don't even have drill holes in yet. So the potential here is incredible. Most of our drilling is in kind of the top 250 meters of the vein system. And we do have one hole down there that takes it to over a 540-meter vertical extent. So we know the veins are mineralized that deep. We know they're still wide and strong that deep. So the potential here is fantastic for growing this project. And you've just pulled up a slide here showing where our highest priorities are early on in the program. These are the F, B, and D veins, what you're showing there. The D vein's the best one so far. It's got 60% of the ounces in this resource. It's wide open for expansion, as are B and F. And so the first bunch of drilling is going to go into those three veins and just keep stepping out until we find the edges of those mineralized bodies there. Then move on to the JZ area. And then after that, we go into those red colored areas, which are high priority. They've got some holes in them, not very many, but they've got some silver hits. And then the green, eventually you get down to the green, and the orange and medium and low priority don't have any drill holes in them. So a lot of drilling to do here, a lot of targets to go after, and we're really looking forward to that. So in the next several months, you're going to see the drill program begin and drill results coming out pretty steadily here for some months to come.
Well, that's always an exciting time. And I also appreciate in there that you mentioned that the low-hanging fruit, which I don't know if anyone else got excited about that, but it's certainly a concept I think about a lot of sometimes when you accept not all stages of any process are the same. And there's also something I've grown an appreciation for, especially in mining, but many areas of life, that sometimes getting momentum so people can see what's out there, and also that there are parts where, okay, we have a success here in focusing, and then you can often build on that. So, very well said. One last question, and then just if there's anything else you would like folks to know, but are we too early for any general ballpark on the PA, or do you have even a rough timeline of events that you might, anything further you could share on, just so people have an idea of basically the timeline of what we're looking at?
Yeah, so this drilling will take probably a 7, 8, well, I'd say more like 8 to 10 month time frame.
Okay.
And assuming we got good enough results there to justify PA, it's possible to have a PA out early 27 or late 26 even.
Okay.
That could happen. We're also launched a metallurgical program that'll go on for several months here, and that'll be PEA level. So we're prepping already to be in a position to do a PEA, and PEA can happen pretty quickly if you've done all the background work required while you're drilling. And so how we're setting it up.
Well, that sounds good. And again, I like the way, I think this has a big part of the way anyone who's running a company approaches things, but I appreciate the way you're looking at these things and moving them forward. And Jim, perhaps just in wrapping up, anything else you'd like to share? And if you can tell people how they can stay posted, sounds like you'll be having quite a bit of news, as you mentioned, in the next couple of months. And what is the best way if people have questions or would like to get more information?
Yeah, you could go to our website, which is kootenaysilver.com. We trade on the Venture Exchange, Toronto Venture Exchange, under the symbol KTN. And then in the US on the OTC, QX in the US under KOOYF. So,
All right. And of course, we do have the contact tab here. So if people want to get in touch, that is how you can do it. And I might add, if I can, that it was really nice to meet Jeff, who handles a lot of that for you. So
yes.
good people over there. And Jim, it's been a pleasure to meet you, especially as I've studied silver and the silver mining industry. Not always the easiest task yet for those who can use their skills. And I know you have a lot of experience in moving these projects forward, and will be exciting because the world is counting on people like you to do a lot of the things that we're doing. So pleasure to have you here today, and look forward to following, especially the drill results in the next coming months.
Yeah, we're pretty excited about that too. Thanks for having us on the show, Chris.
Well, thank you so much, Jim. And again, you can find them at Kootenay Silver, Kootenay. And we'll wrap up for now. But thanks again, Jim, and we'll see how it all goes.
All right, bye bye.